Welcome back to Bloomberg News. I'm Julie Hyman.
And I'm Matt Miller. Lori Rothman is off today. We're going to continue with financial regulatory reform here. Establishing a consumer agency within the Fed. That's seen as a victory for consumer protection advocates, but maybe not for the banking industry. Is this the remedy Americans need to protect them from financial product abuse? As we go to former Federal Reserve Governor Robert Heller, he says we don't need this new agency. He joins us from San Rafael, California, to discuss why. Bob, let me ask you, first of all, it seems like the Fed already has a lot of regulatory power and authority here. Is that why you think there doesn't need to be the establishment of a new agency?
Well, absolutely. There's not only the Federal Reserve, there's a whole range of other agencies, the Department of Justice, HUD, the Federal Trade Commission. All of them are in the business of regulating and protecting consumers. So how much do the consumers really need protecting? There are 300 million people in the United States, and one size doesn't fit all. And that's the basic argument.
But isn't the criticism that despite all of those agencies out there, whether it's the Fed, whether it's HUD, no matter who else, that the system failed? So why doesn't it need fixing?
Well, some individuals made wrong decisions, and even the federal government pushed some people into loans, the funds that they couldn't afford. Fannie and Freddie are certainly guilty of that. But if you look at what happens to individuals, your individual counseling, that is what it often takes, because every person is different. There are a lot of agencies out there, for instance, the Consumer Credit Counseling Service here in San Francisco. They do an excellent job counseling individuals how much money they can afford to borrow, how big a house they can afford.
But you're also talking about banks and other financial institutions systemically and institutionally taking on risk, and that's something that is not necessarily an individual decision. It's really corporate-wide, and that's something that the Fed, the SEC, whatever regulator you're talking about, didn't put a stop to.
Right. There's some very basic rules, low-level rules, that apply to all the banks. But then it's the supervision and the regulation that comes into play. And yes, clearly, the regulators cannot stop disasters from happening like it happened.
Wouldn't it be a better idea, Bob, if you just consolidated the authority to deal with consumer financial protection into one agency, and then you left the other agencies, like the Fed, for example, free to deal with their most important main tasks? The Fed dealing with monetary policy, dealing with interest rates, the SEC chasing after the potential future Bernard Madoffs, and so on and so forth. I mean, wouldn't it be better if there were just one CFPA that existed solely for consumer financial protection?
I would be in favor of that if you actually stop all the other agencies from doing the same. And by the way, there are also 50 states out there. All of them have consumer protection agencies. But one consolidated agency that would take over the tasks that are now dispersed would probably be a good idea.
And should that be housed within the Fed, or should it be completely independent?
No, it should be independent, not inside the Fed, because the Fed's role is really to make monetary policy and to do the bank supervision and regulation. To take on that additional task, and if it's an independent group, independent from the Board of Governors, I don't even know how it would function inside the Fed.
Bob, I want to see if we can listen into Elizabeth Warren, the head of TARP, who spoke earlier about regulation generally. So let's just listen into that for a moment.
Regulation has done good things for Americans. It's done good things in physical products, in the things we touch, in the things we taste, in the things we feel. Where it has failed is in financial instruments, in the financial world. And so what we're really saying here, what I feel that we've got to be talking about here, is not that it's impossible. We can point out what's wrong with it. It's that we have lots of models that regulation can work, and that the fundamental principles are sound.
So you heard Elizabeth Warren there. She sounds quite hopeful that it is possible to fix this model, to have successful financial regulation. I mean, how optimistic are you?
Look, she says the Food and Drug Administration, the regulatory agencies in the medical field doing a great job. Well, we still have diseases around. We still have the flu. We still have pneumonia. We still have cancer. There are regulatory agencies. Well, there's just the same thing happens in the financial sector. We still catch the flu. So there's no way to avoid all calamities in the world that we live in.
All right.
That would be my view.
Well, thank you for your views. We appreciate it very much. Our thanks to former Federal Reserve Governor Robert Heller.